Well, the only thing more volatile than stocks has been Bitcoin. It seems like market volatility has taken the focus away from the cryptocurrency, but it's a little bit lower today, still up nearly 14% in the last week. Our next guest says investors could see more pain ahead. Let's bring in our Bitcoin bear, Peter Boockvar, Chief Investment Officer at Bleakley Advisory Group. Peter, great to talk to you.
Hi, Jackie.
Talk to me about why there's more trouble ahead for Bitcoin.
Well, let me start by saying that analyzing where the price should be is extraordinarily difficult because it's just a price. It's not based on cash flows. And I believe it's not even based on the quantity of Bitcoins because now it's technically infinite with all these forks that have now been created. So picking a price is really more throwing a dart. I think that typically when markets go parabolic, they usually give back a lot of that gain. And since the price of Bitcoin is still well above where this parabola started, I still think there's a lot of downside. I look at Bitcoin more for looking at engaging the speculative appetite of investors. And whether it's in Bitcoin or it's in something else, I think a lot of the speculation and euphoria in these markets manifested itself in Bitcoin, in addition to stocks, but Bitcoin in particular in late last year.
Peter, do you think when we see these breaks in Bitcoin that it indicates what's coming next or foreshadows what's coming next in the stock market?
Well, I think it is something to look at, again, because it's a bastion of speculation. And when Bitcoin exploded to the upside, I think that really coincided with almost a peak in euphoria in markets generally. And Bitcoin started to fall in mid-December, so that was almost a precursor to a peak in euphoria in equities and the subsequent decline. I think it all circles back to where interest rates go, because rising interest rates sort of dims the speculative behavior. And if Bitcoin resumes its decline here, I think that equity investors should pay attention in that it's a sign that maybe risk aversion is creeping into markets again.
All right, both the traders want to jump in. Jeff, let's go to you first.
I'd be interested to have your opinion here, Peter. What price do you see Bitcoin going to, and is that going to be an equivalent low in the stock market from a percentage-wise perspective as you're using Bitcoin as the precursor?
Well, again, I just look at a chart to say where Bitcoin could go, and even if Bitcoin went to 2,500, and I said on the show last time that it can go to 1 to 3,000, you're just back to where you were last summer. But in this kind of a move, it's very possible that we do end up, as I said before, back to 1 to 3,000, and that again would just put you back to where you were early last year. The decline would be dramatic. There's no question about it from the highs, but I think in historical bubbles such as this, and this bubble could have been as big as any bubble ever seen, you typically get 80+% declines. It certainly happened in the NASDAQ in the early 2000s.
Jimmy?
When you, Peter, see the euphoria that was in Bitcoin, and then you look at the pervasive short vol trade, and then even things like $450 million fake Da Vinci painting selling, do you think these are all close cousins to interest rates being held too low and money just seeking other opportunities?
Yes, this is the everything bubble generated by 7 years of zero interest rates and negative interest rates overseas and massive amounts of money printing. It shows up, and the asset price inflation shows up in many different places. So an emphatic yes to your question.
Peter, looking at gold prices today, trading at $1,330, what's the move in Bitcoin telling us about where we can expect gold to go?
Well, to me, the Bitcoin and its creation and its love affair that people have with it is the best advertisement you can possibly have for gold. Bitcoin's been around for 10 years, gold's been around for 5,000 years, and Bitcoin's really hard to get out of the ground. And Bitcoin and other cryptos are really easy to create through algorithms. So to me, it's a sign that there's questions about the strength of the U.S. dollar, which is obviously weak, and I expect it to get weaker. While gold is not necessarily a medium exchange in that I can go to a pizza place and buy food with it, I can certainly exchange it for the cash that pizza place would accept with. So to me, it's still a medium of exchange and a store of value that Bitcoin is attempting to be.
All right, Peter, great to talk to you. Thanks so much for calling in.
Thanks so much.
We'll talk to you soon. Meantime, Jeff, you're trading the CBOE Bitcoin futures for us. What's the trade?
Not as wildly bearish as Peter is, but I am a seller here, Jackie. And this is a CBOE, the one coin contract. I'm selling at 8,900 here, and I'm looking for $1,000 move down to 7,900. However, I'm being mindful of what little technicals we have to lean on, because remember, the second expiration is just tomorrow. So I'm looking to stop myself at $9,400. Reminder, this is the Feb contract, not the March contract in the CBOE. One coin contract, that's going to expire tomorrow. So make sure you're in the right contract.
Since we've launched the CBOE and the CME's futures contracts, pretty much Bitcoin's been on an almost uninterrupted down move. To me, that means we opened up a hedging instrument for people that have been long Bitcoin for a long time. And the proclivity is to sell the futures contracts more than there is to buy them. I cannot play this from the long side. I definitely think that Jeff's got the right way. I think at the end of the day, Bitcoin was given the proxy for blockchain technology, which is where the real love was, and they were anointing the winner of a game that wasn't even played yet. I'm not for it.
Okay, let's go ahead and get the risk reward on this trade. Jeff is selling the CBOE Bitcoin futures 8,900, targeting a move to 7,900. In this trade, each contract is 8,900. He's risking 500 to make $1,000 on the total trade.